Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's day is May 19, 2023. This is a Forex quick look. I'm going to take a look at the sterling versus US dollar on an hourly chart. So let's get started. Recall from yesterday, the price high from yesterday came in right near the 100-hour moving average and found willing sellers. Those sellers took the price down to a swing area. Follow this yellow area right through here. If you go back in time, you can see a number of different times where the market either bottomed or found resistance in that area going all the way back to here. So following along here, a lot of different times where the price again found support or resistance against that area, and that's where the price stalled in trading yesterday, and we stalled in trading here today near that low as well before starting its move to the upside. That move to the upside moved right back toward what level? The 100-hour moving average. That's a blue line in this chart. Again, that was the high price that we saw in yesterday, and the high price right here after failing above that level on Wednesday's trade. We reestablished the level against the 100-hour moving average. Sellers again here today has pushed the price further to the downside. We are below a swing area here, which is defined by a low here, low here, low here, low here. That defined the area right through here, and then we came down and retested that area during trading earlier this week before bouncing. Admittedly, we got a little messy on this day right here when the market was swinging to the downside and sharply to the upside, and this was a time though when the price moved above the 100-hour moving average as well. So it took a little bit extra here, a little bit extra here before rotating back to below the 100-hour moving average. And now we're back below that swing area here between 124.35 and 124.45, and that's going to be our close resistance level intraday. If the price can stay below that level, the sellers remain in firm control. More conservative risk levels would be the 100-hour moving average at 124.69. The price, as long as it stays below that level, the sellers are also more in control. We do have Fed chair coming up at 11 a.m. Today. We saw Fed officials over the last few days become a little bit more hawkish. Is it that the regional banks have sort of stabilized? Possibly. Is it that stock markets are moving higher? We have the S&P testing the key 4,200 level here today, and that the Fed doesn't want that to get too overheated. That may be it as well. But the Fed chair will give us his views on where he stands from an economic and monetary policy standpoint, maybe at 11 o'clock, and we'll see what he has to say. I would guess that he wouldn't be too dovish in his comments, probably leaning a little bit more toward on the inflation side being still a concern. We will see, but watch the 124.35, 124.45 level in the pound versus US dollar, and then the 100-hour moving average at 124.69 as resistance, as long as the price can remain below those levels. Moving back down toward our low prices through here between 123.86 and 123.97, and then the low price going back to April 24, somewhere around the 123.70 level would be the next key targets on the downside for this pair. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.